Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 29th of October. Now, just having a look as we run into the end of the month, obviously the big news, once again, no sort of change in the sentiment from the statement from the ECB, but Christine Lagarde did come out and start talking a bit more hawkish in the press conference, right? Very similar to the Bank of Canada, where the surprise package is in the press conference, not in the actual statement. As you can see here, that huge pressure. Now, euro is 58% of the dollar index, right? So that's a major part. Euro is up across all pairs, as you'd expect with this news. Euro itself up 0.66. This is against the market. The market was not thinking this was on the cards at all. But as I was sort of saying, once the central banks do like to work in unison. So the Bank of Canada setting the precedents a couple of days ago or yesterday, 2 days ago. Just looking at the pairs that are really moving, obviously Euro Swiss has budged just by a fraction, but the rest of the pairs are getting dragged along. And most importantly, the dollar itself is down against all pairs, right? So, as I said, euro is a big part of that basket. It's going to pick sterling, Aussie, Kiwi, CAD up and take it along for the ride. A bit of a mixed bag there on sort of the yen. All right, so euro and euro crosses, okay, through the roof on some of those pairs. If you're having a look at the equity markets, okay, US equities having a pretty good day. US bonds, right? The impact from the US bond market has really diminished, right? It's sort of, if anything, really dissipated. So we're now sort of coming back to a risk-on, risk-off profile, right? Equities up, dollar block rallies, and that with that euro rally, that's really supporting that side of things. So just try and click into what's happening and what's going on. Now, don't forget, this is not dollar weakness, right? This is euro strength, right? So don't get confused that they're selling dollars because it's, that's the way of it. No, this is euro strength just dominating the dollar at the moment. And that's not surprising with the fourth week of the month. We've got big US numbers next week. The US dollar could come back and swamp these other currencies at that stage. And that's what we want, right? We're getting closer to a lot of these central banks becoming very active trying to manage interest rates. The RBA was, even though they were saying they weren't going to raise rates till 2024, the market's already factoring in Q1 23. And all the other central banks are starting to light up. This is really good for the currency markets, and it's going to give a lot more activity to the equity markets, commodity markets. We're going to be coming sort of pretty much online, and there's so much stimulus in the markets that they're going to have a hell of a job trying to calm things down. Now, the US bonds have stabilized, but as we've seen, that connection at the moment is not a focus for the market. So I would not really be looking at the treasury bonds at the moment. As I said, it really switches to a risk-on, risk-off profile. Equities up, dollar block up, dollar down, right? This is a nice, easy way for you to follow the market. It's vanilla. And what I mean by that is this is not an exotic move where you got to look what the bonds are doing and what impact that has on equities, and then what relationship that has with the dollar and all these sorts of things, trying to decipher the market. This is a straight up, equities up, euro up, dollar down, right? So don't overthink it. That's just the way it is. There's the dollar index. No surprise, it stopped at that second support trend line, but it should carry into the week a little bit soft, right? That euro strength, there'll be a lot of repositioning by fund managers around the changes expected from a number of central banks over the coming months. Right, so coming into today's trading, and I'll show you the charts in a second, but there's not too much coming out. The Aussie retail sales figures, now that's a number worth looking at. And maybe the housing credit numbers. PPI doesn't really exist for the Australian market, so I wouldn't be watching that. Anything to do with sort of housing is sort of a bit of a tender spot. So keep an eye on sterling. I know euro's gone up, and this is like a euro isolated event. It has given sterling, Aussie and Kiwi a little bit of a breath of fresh air, but you know what? They've got other things going on. I've been watching very closely the US numbers and the flash GDP numbers out of the Eurozone, the personal income consumption numbers, PCE price index out of the US. A pretty good one to finish the week. Maybe stable. Like these numbers are a bit strong. We should see Euro drift back. If they're weak, it sets us up for the start of next week with a sort of weaker tone on the dollar as we run into the FOMC and the non-farm payrolls. At the same time, dollar CAD, well, you know what? The Bank of Canada did give us some sort of direction. Keep an eye on the Canadian GDP figures as well. They're well worth having a look because over the top, dollar CAD does have a bit like it wants to go down. There's a CAD strength in the market. It's getting pulled apart from all different areas, but maybe those GDP numbers give us something to think about. Now, coming back to the major pairs here, I haven't really sort of changed any of my charts just yet, but really, if anything, I'd be sort of redrawing the some of the trend lines here. There's no need to be redrawing this trend line. That's now, that resistance level is now going to act as support. And this isn't just a stop loss run either, right? Because you can see here, a stop loss run would have been to this level here and then drift lower and then sort of fizzle out. This is actually like a bit more of a genuine move, and it's valued itself up around closer to 117 to figure. Now that's setting itself up for a potential move higher. And it's all going to come down to the US numbers next week, right? So that's going to be very interesting as we go forward from there. Sterling, well, I tell you what, it hasn't lost its luster. I mean, it still wants to sort of go higher, but if anything, I'm probably redrawing that support trend line down to that level it's bounced off. And you can see it's, I left that level there the other day, this resistance line, just to show you where that trend line broke, but that's the way it should be looking at the moment. You can see very clear levels to get in and out. The Aussie also recalibrating to that little low it had after the RBA. And also you'll be doing the same with the rest of the charts here. So good time to recalibrate, have a look. The Euro move is very good for the market, right? It actually gives us some fresh news, fresh information, fresh flows. The Euro has been sort of stagnant and non-directional for some time. It's just been the dollar moving things around. Now we've got the ECB involved. It adds a whole new layer of opportunity in the market. So even if you didn't sort of get hold of this opportunity, this is a good sign for us, right? And as I'm talking there, just going through, just adjusting the charts to where they need to be adjusted. Now, at this point, you're not really overthinking it, sort of working out, oh yeah, what have we got to do here and there? The other side is here, this clean out in dollar Swiss to the downside is also a nice clean move. Now, dollar yen is sort of all over the shop. I'm not sort of getting overexcited there. Dollar CAD, as I said, oil sort of been washing around here, those green lines. It's adding a little bit, making it look still tricky to get into the CAD. The dollar index, though, still hasn't crashed out. As I said, the dollar could come back next week should the numbers be right. But technically, that's where everything is, right? So have a look around on your own charts, get positioned or repositioned, recalibrate what's going on. As I said, the whole situation right at the moment, risk on, risk off, equities up, dollar block up, dollar down. Simple trading. I like that structure. If we could overlay some economic fundamentals to go with that flow, so strong Euro numbers or weak US numbers, you've got an easy trade on the cards. All right, guys, have a good one. All the best. Cheerio.